biggest advantage, as is the case with the group here, is the network effect that we're talking about, where it has access to, say, 400 million customers of the telecom base. It has about 200 million customers in the retail space. Unparalleled distribution footprint across 15,000 plus outlets that we're talking about, including the digital stores, the Reliance Mart, the various grocery stores, the Reliance Digital that they own. So you're talking about an enormous amount of reach and distribution wherewithal or capacity that the group has, and then how well you can leverage this data to come up with innovative financial products and solutions to your customers. And as I said, one of the biggest points of difference between, say, JFS versus, say, some of the other fintechs here is that JFS will have a significant access to capital and will actually lend from their balance sheet. So it's going to be a balance sheet heavy business and not merely a distributor or an asset light business, which significantly differentiates, because that gives a competitive advantage, because you can call the shots at that point in time when you are lending to your own customer, right? Rather depending upon a bank or another NBFC to decide and take a call as to whom to lend and whom not to lend. So that's the advantage that Reliance brings in. And of course, as you know, the group is pretty good in terms of its execution capabilities and stuff. So net, if I were to put all these pieces of puzzle together, it becomes quite a formidable force, I would say, in the overall financial ecosystem.
Suresh, if one were to take this point about fifth largest forward, then the obvious next question would be, who all will it displace? Now, it's very clear that in terms of the banking space, you have two big names, HDFC and State Bank of India, who are going nowhere, and then there is ICICI, and there are other names also. I'm not saying this from a sort of company picking or stock picking point of view, but who will JFS displace? Will it be more of an NBFC impact to be felt to start with?
Yeah, sure. Okay, so I will refrain from taking any particular name here, because that should not be the purview of this discussion. But generally, if I were to give you an overview, the one which it will least disrupt, or where there is less of a challenge, is going to be banks, because what happens here is that JFS, at least when they begin, they are now going to get a banking license, right? So the Reserve Bank of India, of course, has been a bit more reluctant in giving corporate groups banking licenses. So JFS has an NBFC license, a payments bank license. Maybe they'll end up getting the insurance licenses also, and they may get AMC, broking, and all other kind of licenses that we're talking about. But banking license is going to be a difficult task. So their ability to go and completely disrupt, because they won't have access to retail deposits that the bank has. So that cost of funds advantage that banks have, and therefore they can cater to the creme de la creme customers, is always going to be there with the banking space. In my opinion, the immediate impact will be felt both on the NBFC as well as in the fintech space. So what they are likely to do, in my opinion, when they begin their operations is they can go aggressively on the, this is what they have also mentioned in the press release, both on the consumer lending front as well as on the merchant lending front, because that's where I think they can see an enormous opportunity, and that's an area where both NBFCs as well as fintechs compete and collaborate, right? So that's the market where they can significantly cause quite a lot of disruption. And note that Reliance Industries as a group itself borrows at much more attractive rates compared to some of the AAA rated NBFCs. So you can imagine when you can bring that kind of rating to JFS, and JFS is in a position to borrow at very attractive rates, they can compete with every NBFC in the market, and also for that matter fintechs by obviously having their own payments ecosystem, and at the same time collaborating and trying to do various kind of lending to both consumers as well as merchants. Particularly in the consumer front, I think they will begin by doing a lot of digital lending. They will also do a lot of consumer unsecured loans, because those are relatively, I would say, quick to market kind of loans, rather doing a secured loan, because you need to have a collateral, you need to have a proper recovery mechanism, physical repossession activity in place, which I think will take time. They will definitely enter into that space. Initially, to begin with, largely NBFCs and fintechs, particularly involved in the consumer as well as merchant lending space.
What are the likely execution risks for an enterprise of this sort?
Yeah, I think, look, this is somewhat kind of an uncharted territory, right? Because at the end of the day, everything really depends upon the kind of people whom you're going to recruit, because it's a very HR intensive process. You may have the technology, perhaps you can buy the technology, and you can have experts with great, who can build up great user interfaces, and have a great tech ecosystem. But the real challenge in any financial services entity is the ability to lend, right? And that has complete skill sets, different skill sets in terms of ability to underwrite, in the ability to use alternate data to underwrite some of the loans. So I think that capability needs to be developed, and therefore they of course have got the man who has built several businesses in the past in ICICI, which is KV Kamath, who is KV Kamath, and we all need to see what kind of people he is able to hire and actually grow the business in due course of time. But those are some of the execution risks that we should be mindful about. Basically, setting up the entire credit and lending ecosystem.